Good evening, my dear friends. Welcome to Petron Live Sharing Class. So once again, it's my greatest honor to be able to share with everyone here. Hope everyone in my class are able to pick up some knowledge from my sharing and able to fully understand the materials I prepared for everyone. Please also take some time to read up again if have any doubts, and also put the knowledge you have learned into practice. Continuous of learning and practice will definitely improve your trading skills and will eventually lead to profitable trades. Financial freedom is our ultimate goal, so let's work hard together to achieve it. Today, I will share a new technique called 1-2-3 rules with everyone. Contents I picked to share with everyone I believe is useful and important for most of our friends. This technique is able to help everyone to have a clear understanding about how to read the charts. As for my job here, it's not only sharing trading techniques, but also here to scan for more profitable, high quality stocks, share market analysis, and guide everyone in all trading aspects. So I hope that in 2024, everyone can be more skillful and profitable. Thank you everyone for your support. Okay, friends, let's take a look at today's content, what we'll be covering. We have 5 topics, okay, for today. Okay, let's move on to market analysis. In a global situation of mixed feelings, the domestic market benchmark indices Sensex and Nifty have resumed their upward momentum due to overbuying, ending the consecutive of 2 days decline. Specifically, it should be the most eye-catching market in the Asian region. I only mention the Asia market because the final situation in Europe and America is still unknown. Personally, I think this is already a great and big success for India. I personally feel happy and excited about it. Not so much because of how much it has risen, but because we are leading. Okay, let's move on to the Nifty chart for today. Okay, let's take a look of the trend of Nifty index. The market today started off relatively flat, then began to decline, but rebound before midday and recover almost half of the decline by the close. From the perspective of the market trend, there is a demand for adjustment, but the buying pressure from below is relatively strong, causing the current high level oscillation pattern. From a technical perspective, the price today just tested near the support level of 21,600 and then it rebounds. We have mentioned that the 21,600 level is an important short-term support level. Not easy to break through on one hand, and in the case of effective support, it can quickly resume its upward trend. The location where the price tested today is also close to the 10-day moving average on the daily chart, which is also a support level. Therefore, it is reasonable that the price was able to rebound all the way in the afternoon. Today's oscillation is mainly due to worsening situation in the stock market and the uncertainty of the third quarter profits of domestic enterprise. However, in my opinion, even so, it is not possible to shake the foundation of a bull market in India stocks. Okay, let's move on to Sensex. As for today, the Sensex index also opened with a gap up and eventually erase all the losses from the previous trading days. With the differences being the daily trend of Sensex is slightly weaker than the Nifty index. We can see that the Sensex index is performing well within an upward channel, with the past 2 days revolving around the 10-day moving average. If we only consider the moving average, it doesn't matter if the price crosses it only once. But if the price crosses the moving average up and down multiple times, the trading market will evolve into an oscillating market. Even with it is oscillating uptrend, its rhythm will become less smooth. And of course, Sensex does not have this problem at the moment. As I mentioned before, the Sensex index is slightly weaker than the Nifty. In the previous trading day, the Nifty index retraced exactly to the 38.2% position, whilst the Sensex index fell below the 38.2% level. I haven't marked this on the chart, but if anyone interested, they can study on it on your own free time. In the near term, the Sensex index only needs to focus on this upward channel. As long as the price operates within this channel, is a healthy uptrend, without the need to consider of anything else. Okay, let's move on to microanalysis. Okay, we will continue to focus on micro data and news. I have already shared with everyone the importance of reading up and paying attention to the news and data for investors. So, I will not explain the reasons in detail again. Just remember that it is just important as a technical analyst. As for the difference lies in how investors interpret the news and the data. As I mentioned before, the same data or news may be interpreted differently by different people, and whether it is right or wrong can only be measured by the actual market trends. So, how can we improve our accuracy of interpretation of the news and data? Only by continue learning and accumulating more experience. Then we can improve our accuracy. Okay, let's see what I prepared for you. Okay, in recent days, the market and investors have been most concerned about the minutes of the Federal Reserve meeting, hoping to receive further information about the interest rate cuts. However, it is regrettable that reality often contradicts everyone's expectations. During these meetings, Federal Reserve officials extensively debated the shift of US monetary policy, expressing new concerns about how long the economy can sustain under the current high interest rates. They also openly discussed when to stop reducing the balance sheet based on the minutes of the meeting on December 12 and 13. Federal Reserve Chairman Jerome Powell outlined the general outline of the meeting at the press conference held after the meeting, indicating that the central bank may have completed rate hikes and is expected to begin to lower borrowing costs by the end of 2024. In my opinion, the most important statement in the minutes of this meeting is that, on one hand, the market originally thought that the Federal Reserve might even start cutting interest rate in March. But on the other hand, Federal Reserve Chairman Jerome Powell stated this time that it is expected to begin lowering borrowing costs by the end of 2024. This is a significant difference in time. For beyond people's expectations, so on the day the minutes we were released, all three major US stocks indexes fell. In fact, the minutes hardly directly indicate when interest rates cuts might begin. Participants pointed out that the economical outlook is exceptionally uncertain, and the possibility of further rate hikes still exists. However, most believe that monetary policy is having the expected impact on inflation expectations and will continue to play a role in retaining household and business spending to bring inflation back to target levels. The minute states that future policy decisions will be cautious and data dependent. It is well known that the Federal Reserve will eventually cut interest rates. It's just a matter of when. Prior to that, any price declines are merely short-term adjustments. Furthermore, the next Federal Reserve meeting will be held on January the 30th and 31st. Okay, let's take a look at the next news. We are concerned, about the international market. And then we will take a look at the domestic market. Indian Minister of Commerce and Industry, Piyush Goyal, said on Wednesday that despite a 6.5% year-on-year decline in shipments in the first 8 months and a global trade slowdown, India commodities exports for current fiscal year are still expected to reach last year level. Goyal also mentioned that global economic growth has been negative. International trade is in the negative zone. And it's expected that international trade may decline this year. In the current situation, we will maintain last year's data and strengthen our processes and domestic capability to enable faster growth in the coming years. As mentioned before, exports is an important factor in the three major elements of economic growth, has made a significant contribution to economic development. If in this 24 fiscal year, we can maintain stability while other countries in the world experience negative economical growth, then we are already leading globally. If the economic data continues to improve, it will also provide important economical basis for the rise in stock market to a certain extent. So we will not delve too much on this, and let's move on to the next sharing. Next we will be study of the 1, 2, 3 rules. In my previous 2 live classes, I just shared with everyone about Dow theory, which is most fundamental and foundational theory of technical analysis. Now, we all know that the Dow theory is the origin of all technical analysis. It means that the majority of the technical analysis theories or school in the markets are developed based on the Dow theory. Today, we will continue to share with you the theory and methods that can be applied in actual trading processes, which is called the 1, 2, 3 rule. It is a practical tactic that directs emerge based on the Dow theory. let's begin with the details. Let's start with a question. What is 1-2-3 rule? The 1-2-3 rule was invented by this guy called Victor Sperandos based on Dow theory. He simplified the complex and challenging task of trend recognition, thus forming the rule called 1-2-3 rule. We mentioned Victor Sperandos. Have any of you guys heard about this guy? I think most of you have not. Okay, he is a very powerful figure in the history of American trading. Victor, a professional security trader, a prominent figure on Wall Street. He was once acclaimed as the Wall Street Terminator, okay, by this guy Baron. From 1978 to 1989, he has made consecutive profitable investment for 12 years without any losses. Therefore, his invention of the 1-2-3 rule has been highly sought after many investors to this day. So today we will specifically study this 1-2-3 rule. So, what is exactly 1-2-3 rule? Okay, this number or the name may be very simple, but sometimes we often find the simplest method are often the most applicable in life. The 1-2-3 rule is essentially a rule for judging trends, changes, and buying on dips in an uptrend, or selling shorts on rallies in a downtrend. The 1-2-3 rules is a universal and is widely used in major financial markets such as stock market, foreign exchange market, and commodities market. It is universal because it is based on the application of trend. Okay, trend is a word that we often mention in trading. So, is it the most commonly used method or means? Okay, follow the trend is undoubtedly considered the highest trading principle. Okay, let's continue on this. The 1-2-3 rule. These few words are very simple. So what do 1, 2, and 3 in the 1-2-3 rule represents? Let me explain this clearly, then subsequently slides will be easier for everyone to understand. First of all, the 1 represent trend formation, meaning the breakthrough of a stock price trend line, which is a symbol of the original trend, is ending. If the stock price breaks through the trend line upwards, the downtrend ends, and the future trend is bullish. This is the first buying point. If the stock price breaks through the trend line downwards, the uptrend and the future trend is bearish. This is the first selling point. Okay, let's move on to the 2. Okay, what does 2 represent? It represents correction, okay, meaning the stock price testing the original direction again, but no longer reaching a new high or new low, confirming the end of the original trend. If the downward test does not reach a new low, it indicates the end of the downtrend. This is a second buying point. If the upward test does not reach a new high, it indicates the end of the uptrend. This is a second selling point. Okay, for the last one, the number 3. What does 3 represent? 3 represent trend reversal. The information of a new trend, which is a sign of trend reversal. If the stock price does not reach a new low in a downtrend, but instead reaches a new high, it indicates the reversal of the downtrend to an uptrend. This is the third buying point. If the stock price does not reach a new high in an uptrend, but instead reaches a new low, it indicates the reversal of the uptrend to a downtrend. This is the third selling point. In this way, through textual and verbal descriptions, everyone may still have not a clear understanding of the 1, 2, 3 rules. So next, I will use graphics to describe and explain to everyone. Okay, let's move on to the charts. Okay, take a look at these two pictures. Okay, these two chart A and B. Okay, this diagram of the 1, 2, 3 rule, I use two chart or graphics. Okay, one is the 1, 2, 3 is uptrend, and the other one is downtrend. Okay, there is a point I want to clarify first. In the following explanation, we will focus on discussing the 1, 2, 3 rule in a downtrend. Okay, which is B. Okay, which is B. Okay. The reason is very simple. Okay, this is to use the find the buying point. Okay, you want to know when to buy. The 1, 2, 3 rule is in an uptrend can actually be used more to find selling point. Okay, for the this one A, find selling point, or to go short in a two-way trading market. Okay, as for the two-way trading market, this is not our focus for this discussion, so I will not discuss on this aspect. Okay, so take a look. I mark A and B for the two graphs. The graph on the left, which I mark A, is the 1, 2, 3 in an uptrend. Okay, 1, 2, 3 rule in an uptrend. And the one I mark on the B, okay, is a 1, 2, 3 rule in a downtrend. Just as I have mentioned, okay, let's recall the definition of the 1, 2, 3 rule I mentioned just now. Then it will be very clear or clearer for everyone. Okay, looking at the 1, 2, 3 rule in the downtrend, which is on the right, okay, on B graph. The first part is an upward breakthrough. Okay, if you can see in green color line, okay, it's a breakthrough. This is a trend line, breakthrough. Okay. Okay. So the second part, okay, is a retracement or the correction. Okay. But during the retracement or correction, no new low is reached. Okay. The low point generated here is a secondary low. And as for the third part, is the upward movement after the end of the retracement. And the upward movement exit the high point of number 2. Okay, exit high point of number 2. Meaning a new high is reached. At this point, it can be said that the original downtrend has ended and a new uptrend has emerged. Of course, how long does this new uptrend will last and how high the rise will be is beyond the scope of the 1, 2, 3 rule research. As you all can see, I marked a buy on the chart. I will talk about it on the next slide. Okay, you can see a buy here. Okay, I'll talk on it on the next chart. Okay, let's move on. Okay, next, let's look at the application of the 1, 2, 3 rule. Okay, practical scenarios. First, in a falling market, when the stock price breaks above the downtrend line and then retrace before breaking through the previous rebound high, it is a buy signal. This is the most produced and least risky buying method. Can you buy the stock when the stock price breaks above the downtrend? Okay, which is over here. Can we buy over here? Absolutely, yes, you can buy. Okay? And in the 1, 2, 3 rule, when the retracement of 2, okay, the number 2, does not produce a new low and then rise again, okay, which is here, can we buy? The answer is yes, of course you can buy. It's just that when the point that I mark buy, which is here, reaches a new high, buying at this point accompanies the emergence of a new uptrend with the lowest risk involved. Second, in a rising market, when the stock price fall below the uptrend line and the rebound before falling below the previous low of the previous decline, it is a sell signal. Okay, this method is commonly used in the stock market to determine the opportunity to exit existing holding. That is for selling. Okay, so I didn't put a chart here because we concentrate on the buy. Okay, just touch a bit on about the sale. Okay, let's move on. Earlier, when I explained to everyone, I'm using a standard textbook style graphics, meaning they are actually very nice, very perfect. Okay, but in actual analysis process, the market does not always present standard graphics. The reason is because when standard graphics are seen and everyone recognize and can operate on them, as long as you have learned the 1, 2, 3 rules, some non-standard graphics are bound to appear in the market, which is also considered as variant graphics. This is also why I have always insisted that everyone should learn and apply actively, not just rigidly learning. When any tactics or methods produce standard graphics, of course, it's good. When some non-standard graphics cases appear, we also need to know how to deal with them. So, let's take a look at these graphics. Okay, I have simply listed some variance graphics, which of course also belongs to the 1, 2, 3 rules type. But they do have some differences from the standard graphics that we previously just talked about. Here, I leave a question for everyone to think about. When we encounter these variance graphics in actual trading process, how should we respond? Or what strategies are there in the actual trading process? I will not give everyone an answer to the question I just asked. You know why? It is because there is no standard answer. Why is there no standard answer? Because the answer is very simple. Everyone trading style is different. Some people have conservative style and some have aggressive. So some aggressive style, so they are different. We cannot base on which style to pinpoint on. The strategies of different styles of different traders are different. But no matter what style of trader you are, you can find one or several strategies that most suitable for you, and that it will be enough. Okay, let's move on. The 1, 2, 3 rule, okay, the advantages, is so popular in the market for a reason. This is definitely inseparable from the advantages. The 1, 2, 3 rule is simple but highly practical for buying or selling strategy. And its advantages are very obvious. These are specifically demonstrated in the following aspects. Number one, the larger the time period, the higher the accuracy, and the greater the profit potential. This is very obvious because we all know that the shorter the time period, the more clutter will be in the stock price movement. If applied in a larger time period, you will naturally ignore the clutter in the market. If you focus too much on the shorter period, this clutter will affect your normal trading. Ignoring the clutter will definitely lead to higher accuracy and, of course, greater profit potential. Point number two, this rule mainly captures the trend, trading opportunities, and does not focus too much on short-term trading opportunities. In fact, this is similar to the previous point. As we mentioned, short-term trading focus on a smaller period. So the clutter cannot be completely eliminated. Therefore, this will affect the success rate. And for point number three, easy to learn and highly practical. This point is very easy to understand, so there's no need to say any more about it. Okay, next. The above is some specific contents about the 1, 2, 3 rule. No matter how much we talk about it, in the end, it depends on how it is applied in practice. So next, we'll discuss the application of the 1, 2, 3 rule in practical scenarios. Let's first look at the basic application method, which is actually based on the definition of the 1, 2, 3 rule. The first method is to buy at the first time when the stock price breaks above the trend line. Okay, you can see over here. This method corresponds to the 1, okay, of the 1, 2, 3 rule. In this example, based on the 1 of the 1, 2, 3 rule, we should buy when the stock price breaks above the downtrend line. When we buy, we cannot accurately predict how much the price will rise in the future or at what pace. We only know that this kind of buying is correct and conform to the strategy of the 1, 2, 3 rule. As long as the strategy has a high success rate, we do not care about the profit or loss of 1 or 2 sections or transactions, because we all know that as long we persist on, this method will definitely bring us profit. Because Victor, 12 years, 0 losses. Okay? He used this method. Next, let's take a look at the second method of the 1, 2, 3 rule. It's a basic application. Okay, the second method is buy when the price retrace after the 1, okay, is formed in the 1, 2, 3 rule, but does not make a new low. In other words, buy when the 2 is formed, okay, which is 2 here. It might be difficult to understand in words. So you take a look at the chart and point out at 2, okay? Everyone can see the 1, 2, 3 pattern, right? So our second method is essentially to buy when the 2 is formed, which is here. To buy when the price retrace after 1, okay, we come down here, but does not make a new low, because the low is here. Alright? Here is important to pay attention to the detail. In fact, where I mark 2 is actually near the lowest point of the retracement. However, in actual trading, we often wait for the price to start to rise when 2 is formed before the taking action, or wait for a large upward candlestick to then we take action. Furthermore, when we buy at the end of 2, okay, many times the price retrace again after we buy. We must accept this kind of retracement, meaning what? Going up, then come down again. Okay, we have to accept it. Some friends always hope that after buying, the price will just keep rising without turning back. Meaning, from here, once you buy, all the way go up. But this is just an ideal situation. And everyone hopes for such. Who doesn't want such a trend? But everyone hopes for it, right? But the reality is often different. In the process of our successful profits, there will be always some agony and even a cause of trial and error. But as long as we stick to a high win rate trading strategy, we can make stable profits in the long run. And not to worry about sometimes we make 1 or 2 mistakes. Okay. Let's take a look at method number 3 of the 1, 2, 3 rule. The third method is to buy after the price rebound and then breaks through the previous high point. Which is referred as number 3, okay? Here. Take a closer look at the chart. When the price breaks through the previous downtrend from the bottom and create 1 in the 1, 2, 3 rule, here, the price does not make a new low during the pullback, creating point number 2. Okay? When the price breaks through the high point of 1 again, which is here. Okay? Creating a new high. This creates the 3 in the 1, 2, 3 rule. And the buying opportunity arise. This is the third buying signal in the 1, 2, 3 rule. So in this 1, 2, 3 rule, there's 3 buy signal. Okay, you can buy at 0.1 or 0.2 and 0.3. As I mentioned just now, at 0.3 is the safest. Okay, it's stable. That's why most of people will go in on buying at 0.3. Okay, which is the most reliable. Okay, let's move on. Okay, the content we just discussed is related to 1, 2, 3 rule. Although the 1, 2, 3 rule is very practical, buying and selling strategy, we know that there is no perfect strategy in this world. Therefore, there are some drawbacks to its applications in practical trading. There's 3, so let's talk about the 3. Number 1, the trading opportunities for individual underlying assets are relatively few. Okay. 2, in some cases, the entry opportunities are not ideal, especially for aggressive traders. And for point number 3, this rule is mainly for capturing trend basis trading opportunities. So it's not very suitable for short-term trading. Moreover, a complete trading strategy includes entry point, stop loss, take profit, risk control, and capital management. The 1, 2, 3 rule only address the entry issue, so it can be part of a complete trading strategy. By understanding the drawbacks of the 1, 2, 3 rules, we can avoid the trouble caused by these drawbacks in practical tradings. Avoiding these drawbacks can further improve our practical trading abilities, and of course, this is also a foundation for increasing profitability. Without further ado, let's continue to the next topic. Profit statistics. Okay, friends, today, congrats again. We gained profit from the UC limit stocks. Currently, the accumulative returns has exceeded 80%. Okay, and if we calculate the compounded interest with the actual returns, well, it would be much higher. Today, we also bought another UC limit stock with a high probability of profit, which is tomorrow. All these profits are real and tangible, which is happening right in front of everyone's eyes. I believe it's extremely rare to achieve this level of profitability in the market. Our asset management account is a significant factor, offering unmatched advantages compared to regular accounts. Regular accounts, you can't do it. Okay. Additionally, we collaborate with other powerful entities such as large funds, institutionals, and brokerage exclusive departments, trading in short-term, highly funded stocks, ensuring our high success rate and profitability. This is to enable everyone to profit in a stable and rapid manner. Our ability to lead everyone in trading UC limit stocks for rapid profits fully reflects the advantages of Patron's Ventures Asset Management accounts, which, as I say, cannot be enjoyed with a regular account. Normal accounts, you can't do it. Currently, we are in the second stage of the Asia Pacific headquarters contest, leading everyone to profit time and time again is another goal to help more friends achieve rapid profits, because as your asset appreciate, the managed market level of our asset management accounts will also increase. Thereby is helping ourselves too. Many friends have already substantial profits from the UC trading limit stocks, which is what we anticipated. Only when everyone makes money can Petron Ventures further expand its market influence and compete in the management scale of Asia Pacific region headquarter contest. Only when everyone use the asset management account to earn more profits will the management market value of Petron Ventures in India also increase significantly. This is actually a win-win situation for everyone, for you all and for us. Of course, I understand the slots for trading UC limit stocks are limited. Currently, we have a large number of members, and the allotment may not satisfy everyone's participation. However, please rest assured, I will do everything in my power to apply for more allotments for everyone. And even now, I am negotiating new strategy trades with relevant institutions, ultimately allowing everyone to profit more. Okay? So let's take a look at the recent stocks that we traded. Okay, total here add up to approximately about 80%, which is a good result. Okay, I would say a fantastic result. Okay, let's move on to stock analysts. As I mentioned before, I will track and analyze the stocks that I previously recommend to everyone. Regardless of the timing, our service to everyone will always be consistent. Lately, we have not only traded in stocks with UC limit using our asset management account, but we have also taken profits on 2 of the previously recommended stocks. Okay, I believe that those who have followed our recommendations have also made corresponding profits. As I have always said, regardless of whether the price of the stock we recommend is rise or fall, as long as they are recommended by us, we will continue to track and observe them. Since entering the Indian market, Petron Ventures has always been committed to serve everyone with a sense of responsibility to all members. We'll track all recommended stocks until the end. Therefore, we have also gained the trust and support of our members and friends. And I would like to say thank you once again to everyone. Okay, let's take a look at the stock. Okay, folks, let's start off with Sagamma. Okay, there hasn't been much changes in the fundamentals, so I will not go into details. Okay, let's dive straight into the technical aspects. After a rebound in the past few trading days, the price fluctuation are starting to stabilize, meaning the price swing are getting smaller. One notable features of the stock price movement at the moment is that there have been multiple declines in the daily candlesticks chart, but the price center has been moving upwards in the recent period. Since the low point of this adjustment on 22nd December, we can now draw an upward trend line from the below. Okay, now I can draw a line. Before that, I can't. Okay, higher peaks and troughs have appeared successfully. Having just learned about Dow theory, I believe you all can see the stock has formed a new upward trend. Currently, the stock price is just around our recommended price, which means there's currently limited rooms for further profits. And it also requires a bit more time. So, why aren't we selling this stock? Okay, it's a matter of opportunity cost. Without going into much detail, as personally recommend is to hold this stock, and once the stock price rise enough to generate a sufficient profit margin, then we can plan to sell this for profit. Okay, let's move on to Star Health. Okay, for Star Health, since hitting a bottom price on the 21st December, which is last month, the stock has been showing increasingly strong performance, resemble a V-shaped reversal. After holding and observing for a period of time, the stock price has now broken through the most recent downtrend line. Furthermore, the stock price is getting closer and closer to our holding price. If this price trend continues, we believe that we will soon be in a profitable state. So we will be soon making some profits from this stock. From a technical perspective, the past few trading days have confirmed the bottom again, indicating a secondary retest, and gain support from the bottom before starting to rise. During the previous decline, we repeatedly emphasized that there was no further downside, and the current trend is validating our predictions. I would like to emphasize once again, whether it is before or after buying the stock, we are continuously monitoring. The company is currently operating well with no negative news, so holding is advisable. As for this stock, my personal suggestion is to continue to hold, okay, and observe on this. Let's move to the last stock of the day, Infosys. Okay, as for Infosys, the recent trading days saw a significant decline in the stock price, creating a considerable psychological pressure for ordinary investors. The stock trend is somewhat similar to the Nifty index. It is noticeable that the price has declined over the past 2 days, just touching the lower uptrend line and forming a price rebound today, closing just above 1,500. The significance of the 1,500 price is that some friends bought the stock at this level, concurrent with recent unfavorable news about the company's order. Therefore, my advice at the time was to use 1,500 as a benchmark for a more conservative approach. If it falls below this level, then stop loss and exit. Otherwise, continue to hold. In fact, the stop loss price was initially set when buying the stock was not at this level. Therefore, for friends who have bought this stock, I believe there is no problem. Even if the stop loss is triggered at 1,500, the actual loss is not significant. For those who have already sold the stock, the sudden event regarding the company's orders was not something we could know in advance. If trading this stock has caused anyone losses, please go and contact my assistant. And we will have more profitable ways for you to make a profit in the future. Not only to make up for the losses in this stock, but also enable to you make more profits in other stocks. Okay? So, okay friends, today our live sharing class will end here. Thank you very much for joining my class and giving me your full support. We will continue our live class on this coming Sunday, 7 January 2024, 8 p.m. I hope to see everyone here again. Thank you once again and good night.